I don't know if this is good news or not, perhaps maybe bad news. Bank of America says that digital currencies appear to be inevitable. Folks, welcome back to the channel. Kevin here. Please give this video a like and subscribe if you haven't already. Now let's get right into the meat of this story here. And it says here that Bank of America says that digital currencies appear inevitable, adding that central bank digital currencies, CBDCs, and stablecoins are a natural evolution of today's monetary and payment systems. The bank expects private sector beneficiaries to emerge in all phases of CBDC implementation. Now, this is what I'm reading to you guys here from Bitcoin.com. And it says that Bank of America on the future of money and payments. Quote, the bank wrote, digital currencies appear inevitable. We view distributed ledgers and digital currencies such as CBDCs and stablecoins as a natural evolution of today's monetary and payment systems. Now, what does that mean? Well, our view is CBDCs that leverage distributed ledgers technology have the potential to revolutionize global financial systems and may be the most significant technological advancement in the history of money, according to Bank of America, is how they described it. And it says that Bank of America says that CBDC issuances by central banks appear inevitable for three reasons. Firstly, they may increase efficiencies for cross-border and domestic payments and transfers. In addition, they may decrease central banks' risk of losing monetary control and increase financial inclusion. So, folks, you can see it on the screen here, but I'm going to read that to you again because I want you to understand just how important this statement is. CBDC issuances by central banks appear inevitable for three reasons. Firstly, they may increase efficiencies for cross-border and domestic payments and transfers. Cool. Why is that important? Well, let's just think. How much easier would it be and more efficient would it be to transfer, let's just say, billions of dollars to another country through cross-border transfers, okay? And then also, in addition, they may decrease central banks' risk of losing monetary control. Keyword, control. And increase financial inclusion. You guys know what that word means, okay? If you don't, go back and watch my previous video. Now, it says here that private sector critical for CBDC development. Now, this is where we come in. Central banks and governments can't build new financial systems based on distributed ledger technology alone and have indicated that they will leverage the private sector to drive digital asset innovation. We expect private sector beneficiaries to emerge in all phases of CBDC implementation. Now, folks, I can tell you exactly what that means. And I can tell you, in my opinion, how that's going to play out, where we're going to see it, and odds are how people aren't even going to realize it's happening while it's happening. But I'm not going to put that here because I want this channel to stay on the platform. So you'll have to contact me privately. But it says, for example, the report notes that governments may award contracts to payments and consulting companies in exchange for expertise. Contracts in CBDC. Folks, if it's not clear to you yet, hit me up. Bank of America also pointed out some risks. CBDC issuance and adoption could also increase the frequency of bank runs if not properly designed. The bank warned, adding that during times of stress in the banking system, people could withdraw deposits and exchange them for CBDCs, given that there is no credit or liquidity risk if distributed with the direct and hybrid approaches, increasing financial stability risks. And the report concluded that, however, central banks could mitigate the risk by introducing CBDC holding limits, either a temporary or permanent basis. Is that not frightening? I hope so. But we're not going to be afraid. We're going to be prepared, or at least we're going to prepare ourselves. And I want you guys to do the same. So in my opinion, again, if you've been watching my previous videos and you know my stance, if you're new, welcome. I prefer diversity and security. Okay. So with that, I want to make sure that I have a diverse income source strategy, as well as security and protection as best I can, and also maintaining cash flow. Cash flow is huge. So I got 25 producing assets that can generate cash flow. I'm not going to go through the full list, but what I will do is I'm going to share with you some very important information. And I'm also building a list for free on my Patreon for cash flow producing assets. And most importantly, what I'm about to tell you here. So if you guys want to know more, click the link. It's free. You don't have to pay for it. One of the keys to building wealth is investing in income producing assets. And these assets make it possible to grow multiple income streams. They also serve as passive income sources that require little to no work on your part. Whether you're looking for financial freedom or a source of retirement income, or just looking for ways to grow your wealth faster, okay? Now, number one, dividend stocks. This is going to be important. The stock market is, of course, one of the most popular investments. It's a great way to build wealth. And whether you purchase individual stocks or invest through mutual funds or ETFs, some companies share their profits with investors by paying dividends to shareholders. These dividends can be received as cash or reinvested to buy more shares. And many companies buy more shares, okay? And many companies that consistently pay dividends to shareholders are huge, well-known brands that have been around for a very long time. As a result, these stocks tend to be less volatile than growth stocks or the stock market as a whole, and they're excellent long-term buy and hold investments, okay? Now, this is thanks to online brokerage and apps like public.com, Webull, and Moomoo. Investing in dividend paying stocks is easier than ever. I'm not sponsored, but I am sharing this information with you guys. All three of these investment apps allow you to purchase fractional shares. You can start with as little as a few dollars. In addition, you can use Stock Rover to analyze stocks based on details like their dividend history. And many companies have a proven track record of consistently paying dividends to shareholders over a long period of time. And although we discuss many different types of income generating assets and investments on this channel, investing in dividend stocks is possibly the easiest option for starting, especially for investors looking to get started as a beginner. It also offers another significant advantage: liquidity. And many investments that generate passive income streams often tie up your money and don't allow you to convert it to cash quickly. Now, if you've watched my previous videos, then you'll know that my stance on that is a little, everybody's investment and financial strategy is going to be different. I'm okay with not having extreme liquidity because I want to build growth, I want to build wealth, and I want to build out these streams that can produce the income that can then generate the liquidity. But my position is completely different than others. So you just got to tailor it to what suits you best for this particular time. So basically, if you want to get into dividend stocks, it'll be a great opportunity if you don't need the money for a long time. However, you can sell whenever you decide, so you won't have to worry about not being able to liquidate your investments. And investing in dividend paying stocks can be done on a small scale or a big scale. And you can start small and gradually work your way up by continually adding more of these income generating assets. And folks, these brokers trading apps like Webull, it's a free investing app that provides advanced reporting tools and allows you to make free trades of stocks, ETFs, and options. Again, I'm not sponsored. I'm just sharing this information with you guys to help you guys get started, get on the right track. And oftentimes Webull and other brokerage apps will offer free stocks when you sign up. So, check it out. They have great features like commission-free trades of stocks, ETFs, options, and cryptocurrency. You can buy fractional shares for any amount. They have extended trading hours, advanced reporting tools. IRAs are now available, which is huge, with some of these brokerages offering a 1% match or more on your IRA retirement planning, 24/7 customer support, and the features and perks and benefits, the list goes on and on. Now, with that being said, if you guys want to know more information, you want a deep dive, you want to see exactly what I'm doing, how I'm doing it, again, free links in the description. Join me on patreon.com/Kevin247, and I will show you what I'm doing, as well as going through these 25 cash flow producing assets, as well as a list of my favorite dividend paying stocks. Now, with that being said, this is part of my diversity and security and cash flow producing asset generation strategy and method moving forward. And of course, as always, YouTube and content creation is included in that list. So if you got any questions about that and how you too can use it to your advantage to produce additional income, cash flow, and as well as adding to your overall portfolio balance and these dividend paying stocks, feel free, reach out, hit me up. You guys take care, be safe. I'll see you in the next one. Bye.